Good morning all, hope you're doing well, you had a nice weekend. So what we might see us go risk off at the big picture in a few days. So today, tomorrow is going to be really, really important, and what we need is the herd. They need to be shorting, they can't be buying indices. Now it's worth noting that the technicals are improving, and we had come off quite a way on Friday. We were at 5 out of 100, now at 33. So it's measuring all of these, and they're weighted individually. So it's just checking the performance of these indices and individual companies, the treasury yields and the dollar. So that's improving. However, we are still risk on at the big picture, but the way that we're going, we might flip to risk off by Wednesday. QDB scores. And filter it now, and EA at the top, AC at the bottom, and we're seeing quite a bit of green at the top, which is okay. We're seeing a little bit of red at the bottom, which is fine. The euro pound has got a poor score, but we're up, but we have increased on the score change. The largest score change was AN. We've had a huge sentiment shift, so that probably should do okay on the percentage change. Okay, so that's that. Oops, I can refresh it again. So this changes very, very frequently, but it's still very useful. I'll show you the indices and bring that across. I had a cold on the weekend, so in case you might hear I'm a bit bunged up, so it is what it is. It's fine. It's just one of those things. Whenever I go to London, I tend to get a cold. It's a bit weird, but there's the support on the Dow Jones. Yep, Dow Jones there. So let's go here, and then this is the support here. So we've got a box, so that's a support box. The fact they've sold it. Okay, so that's okay, but we've obviously got a huge resistance above, quite a few resistances. I'll show you S&P. We're going to possibly flip to sell. So we have to be really careful. And sideways, 49%. So we go to 50 and above, then will be a sell at the big picture on the S&P. Okay, but we're just sideways, so it's hard to comment here. It might just be the volatility might be crushed in so much as that they don't want it to fall potentially, and so they're going to try and intervene on this, and perhaps if the volatility gets crushed, they might be more likely to sell. It looks like it might sort of give them like a fake reading on the market. So if the volatility gets squeezed out of the market, they might think, oh, maybe it's a sell. If it's pumping one way or pumping the other way really strongly, it can scare them out of the trade. If it's just simply grinding slowly sideways, they might be inclined just to sell it, and we'll get the buy. Okay, so that's possibly going to happen. We've got resistance, the two supports, big resistance and a resistance there, and DAX. So I'm going to take it easy because I've got a bit of a cold and I've got some errands to run as well today, and last Monday was pretty horrible. It was just not fun at all. So DAX, they're possibly it can go either way. It's so close, 39.46, 38.96, so it's like 0.5%, 0.6% difference between the SSI and the moving average, so it can go any way. But I think looking at past performance and the history is that they would sell it rather than buy it, historically speaking. So perhaps we could use that knowledge, and perhaps a scary news event will cement those fears. But we're so close on DAX, we'll have to come back to that tomorrow and see how that panned out. And gold, and we're trending lower. You can see treasury yields are spiking higher, and the herd are long. They went long, well, here really, up here, and they've held on since, and they've added, another add, another add. So it's going to continue down to punish those guys, technically bearish and sentimentally bearish and fundamentally bearish as well. So that's that. I'll show you the robot. Now it's opened up some GU trades, based on the fact that we've crossed over 50%. It's also opened up some AJ trades based on the fact that we've crossed the 50%. So we'll just have to see how we go. If these go to loss, it will just mean that, you know, that new system that we've got, it just didn't pan out today. You know, it was fine on Friday, so I think we'll still stick to it, because, you know, this is the logic, and we're embracing the volatility in the market. We want chop, and so we'll just have to see how we go. And then what's good about this is that the stops are tighter as well, so it won't do much destruction if we get to a stop. So that's that. So we'll need a risk on for this today. We'll need to be risk on for these currency pairs. So we want the herd to sell the indices, and we want the indices to pump for our robot. Okay, and that's how it works. That's the logic for the robot, and it's based on the equilibrium check. So pound USD had fluctuated back and forth, and now it's triggered because they're now net short. That's the logic. Okay, and we'll just have to see how we go. It might be Monday. Last Monday was horrible, where the crowd got really paid and it was just nasty. So I probably won't be trading today. Might just be like a bystander, and I've got a few errands to run anyway. So we'll see how we go with the robot. I think it's still got enormous promise, and eventually, if it comes over here to sell, then we'll get the sell. But currently, it's a buy because they're net short. All right, that's how it works. And I'll be taking it easy because I've got a bit of a cold. I'll speak to you guys soon.